Welcome to Charts This Week. My name is David Linton. I run Updata, and another quick look at the markets this week. We said last week that US stock markets, having crossed through the cloud on the lagging line, now looked vulnerable to new falls. We're in a bear trend on the medium-term chart, the daily chart, and we had a pretty difficult week last week. We did have a little bit of a recovery in prices, but the trend is down, and that was unwound pretty quickly. And in fact, what's interesting is that the lagging line really did hit this cloud level. Around 1300 is now proving to be quite clear resistance for the S&P 500. So what we are seeing really is the ceiling is 1300. The pressure is now to the downside, and so we'd expect further falls, big moves down, small recoveries, big moves down. So really, quite key that. And if we look at the 60-minute chart on the lagging line, normally I would use a 3-hour rule where you'd want to be through on the chart for 3 or 4 hours. We did have a spike through on the lagging line, but we've been bearish pretty well all the way below the cloud, and even this recovery in prices was very short-lived. This was the line we had on the cloud last week. We really didn't get, we got above it on price, but the lagging line is still bearish. Very much these lows of about 1260, we expect those to be tested now that we're below the cloud. If we do get a cloud cross and we do go bullish on the 60-minute cloud, because of that daily cloud position, we'd only expect the 60-minute trend to be very short-lived. So long 60-minute downtrends with the daily bear trend, short counter trend moves on the 60-minute chart. So don't get too excited if you see the 60-minute cloud giving a buy signal with the lagging line through, because it's likely to be fairly short-lived with that bearish trend. If we look at the 1-minute point and figure targets, 1199 was this big thrust that we saw last week. The 1319 target, we did have a move towards that, but it exhausted way before there at this 1300 level. So really the 1199, 1245. So let's say around 1200, 1250. These are the sort of next stops for the market that we'd expect to see. Now the Dow Jones, very similar here, through the cloud on the lagging line. Not quite as clear a signal as we had on the S&P 500, but the price touching the bottom of the cloud now, and the lagging line also that cloud, that 12,200 level, very critically the ceiling on the Dow. So much the same picture. The NatGas through the cloud, as we'd expect. The markets all sort of demonstrating a similar characteristic. Apple, the bellwether we talked about last week, even though we had a little bit of a recovery in the price on Apple, now it's recovering to resistance. So what was pullbacks to support, now we have pullbacks to resistance, now we're through the cloud. So Apple, after a 2-year run, still a bearish picture for this bellwether stock. Exxon, we said last week, through the cloud, looking bad. New lows in Exxon, really key market constituent. New lows here, telling us really that we should expect big moves to the downside with most stocks, constituent stocks. If we look at the FTSE, quite an interesting picture here on the FTSE, the UK market index. We see here that we were through the cloud, unlike the S&P back in February, March time. But we had this real test of 5,600. This is the level where we might see some short-term support, but this is a very critical level. If we take out the new low here, move below 1250 on the S&P would be a new low. That would really be the sign that we are in this bear trend now. But really also interesting, the resistance here at 6,100. FTSE just could not get through. Tested once, twice, 3 times, really tested a few times here. So this 6,100 level, we don't expect FTSE to get through there anytime soon now. We're now coming and testing this 5,600 support level. And with the picture that we're seeing in the US markets, we'd expect, of course, the UK market to fall. Most Western stock markets are in the same boat, all showing signs of falling. The euro last week, we highlighted this congestion zone going on, really quite tight, this triangle. Expect this move to play out quite soon, so just keep an eye on this daily chart. The lagging line is above the cloud, so we're still bullish on this chart. So bullish the euro, bearish the dollar, but keep an eye on this triangle. If we look at WTI, well, this was the big story last week. We said last weekend that oil looked like it would fall quite heavily. Now it was in a downtrend. Lo and behold, there was numbers released and oil fell, but the charts already gave us that signal that oil was going to fall. It fell quite heavily during the week. It was this move out of this consolidation triangle that we said, the move into the pattern, the move out, really suggests back to about 85 is the sort of target price that we see just off this pattern structure alone. The head and shoulders, here we see the shoulder, the head, the little shoulder. Again, that move would be much the same into those mid-80s. So really now the oil going lower, we may have a little bit of support this week, but realistically, oil is looking to make new lows. And here we see the downside target of $68. This thrust off this high has given us a new downside target of $68. We are still in the uptrend. We'd want to wait a little bit more. We want to see maybe 2 or 3 days below $90 to be confident that we're then going down another sort of $20. But we're really testing support, so we may find some support for oil this week, but keep a very close eye. You'll remember last week we talked about the fact that WTI was breaking down, but Brent hadn't, and that spread had opened right out to a historical high of about $23. Well, WTI has pulled through further, and of course Brent now pulled through, showed its hand as well, lagging line through the cloud. Trend is over on Brent and WTI. The divergence is now reducing. They're both falling, spread coming back into line. So we do see WTI and Brent oil both in downtrends now in the medium term. That's weeks and months ahead. We expect oil prices to fall. So really quite critical that. You might recall last week that Brent had an upside target of 140 off this thrust. We said wait for it to be activated before we could actually look at it. Now we've moved below that thrust column. That target is negated. We have a new downside target of 93 on Brent. That's another $10 downside from where we are now, taking us into the support levels. So downside on Brent in the medium term too. And then if we look at the WTI 60-minute chart, we see the trend is predominantly down. We did have a period on last week where for a day we tried to cross this cloud, but then we're still below the cloud. This is a bearish trend short term. So short term, days ahead, days maybe a week is what we think about when we look at a 60-minute chart. This trend is down as well. So we have downtrend on the medium term daily chart, downtrend on the 60-minute chart. Then if we look at the 1-minute targets, we've got thrust targets 88.10. This target was put in a thrust that we saw. We've had little counter trend moves and thrusts. We do have potentially a little uptrend building here, so we may see short-term counter trends. This 1-minute chart, of course, remember, is talking about really hours ahead, so we're thinking maybe a day or two when we look at this chart. But this 88.10 target does hang over us, and we need to get back above 92.50 on WTI for this 88.10 target to be negated. Not looking likely, so keep an eye out for more thrust targets this week. NatGas, we talked about this last week, saying that it was not the time of year. The seasonality told us this is not the time of year for gas to be breaking to new highs. We expect normally a 15-20% sell-off over the next few months on gas. So really, this is just not a time of year for gas to be breaking. Later in the year, we expect gas to run. These targets, 540, 560 are in train, but not now. We expect that to be some weeks out. But watch for any price move, of course. We're pulling right back to the trend on gas. And if we look at the 60-minute chart on NatGas, here we see a few weeks ago we had the cross on the cloud, bearish on gas for the last few weeks. Correlation here to WTI. Here we do see highly correlated over the last day or two, but that correlation now starting to fall off. So oil and gas can start to do different things again. The falls in oil was translating through to gas, but now that correlation falling away. Just keep an eye when you're trading on this cyclical correlation, this historic correlation, and how it's changing, how the correlation is increasing or decreasing. Quite a useful tool in understanding whether you should look at the oil price or not. And then here we see the 1-minute targets for NatGas. Last week we said 422, well, we got there and a little bit more. 412.50 is the current downside target. We do have a little uptrend target of 529.50. So gas does seem to be trading in this 520, 530 range. So we may just see a little bit of an upkick on gas, but that bearish picture on the 60-minute chart reminds us that we are on a downtrend on the hourly. Gold, The trend is still up, but we did have quite heavy falls at the end of last week on gold. This 1550 level is proving to be quite a key resistance area, but this is one of the long-term charts that's trending up. Gold is really one of the things that still seems to be bucking all other asset classes, in that it is in a quite a good long and medium-term uptrend. So keep an eye on that, but new lows. Starting to see some short-term sell-offs there. What would it take for that trend in gold to be over? This move here through 1480, if we saw gold in the 1460s, 1470s, we'd have a downside target to 1320, and in the scheme of the big picture on gold, that would still be an uptrend. Of course, if we make new highs, look to 1650, and this 1800 target on gold is on a number of charts, so that's the one we still look to. That's it for this week. Remember, I'm always happy to cover any charts you like. Just email me and I'll do my best. Until next week, happy charting. See you then.